What is going on, everybody? We have a lot to talk about today in our video. The Japanese yen carry trade blowing people up, crypto, Bitcoin nuking under close to 50K. What's going to happen next? Stay tuned. What is going on, y'all? Let's just jump straight into this. So right now we are looking at Bitcoin, and we can see that Bitcoin had a massive move down to right under 50K. This was on Sunday. It started on Friday, or really Thursday, and there's multiple factors that kind of came together that made this happen. This was a very extreme move. We had volatility that went to the actual VIX went to 65 on Monday, which is historic. Again, a lot to talk about here in terms of what happened to kind of kick this into motion. I think we should start with the kind of the elephant in the room, or like the big factor that really caused us to accelerate. And right now I'm showing you the VIX. Okay, if you don't know what this is a volatility index. And traders use this to really gauge how volatile the market is, right? And as we can see on Monday, this blew up to 65. You probably can't see on the right here, but this was around 65. Just look at this chart. To get up to this point, you would expect for something, there to be some catastrophe, right? You had COVID that got you up there. You had a few different smaller VIX spikes, but you have to go all the way back to the 2008 financial crisis. It's the last time we got up there outside of COVID. So this is like historic, getting up to that point. And if you don't know what the Japanese yen carry trade is, we're not going to spend too much on this. I would look it up on Twitter. There's a lot of threads, but effectively what this is, and a very simplified version or explanation, is the Bank of Japan had very, very low interest rates, or actually negative interest rates, for I think decades. I think this started somewhere in the 90s is when they started lowering them. They were trying to reverse the deflationary, they had a deflationary yen, and that's bad for the economy. So they were trying to fix that. So they got very creative and actually introduced the concept of negative interest rates. So what traders have been doing for, again, decades now, probably more aggressively over the last decade, is they would borrow yen, okay, and they would get that yen and they would like buy dollars with it or something that has, a positive yield on it. And that was a very quote unquote like safe, easy trade, right? And they did this for a really long time. Now, what some people would do is they would take that, whatever they bought that yen with, and use it as collateral, and then they would, make trades on it and stuff. So these are traders, these are trading firms that would be doing this. Not to say that an institution couldn't do this. A lot of people were taking advantage of this carry trade. But what ended up happening last week was the Bank of Japan increased interest rates to by 0.25%. And a lot of people that were doing this carry trade decided, well, we have to de-risk now because this is not as profitable or profitable at all for us. And that caused a lot of deleveraging going into Friday, and it really accelerated on Sunday. Okay, on Sunday it accelerated, and Sunday was wild. Okay, so let me just show you what happened on Sunday. This is the S&P 500. So you opened here, and I was watching this. I was up all night watching this. You had a roughly 4.5% move overnight on Sunday, and this was because of this, again, people deleveraging themselves because of this carry trade. But what it ended up doing was literally crashing the Japanese stock market. And it had its worst day since 1987, which was Black Monday. So a lot of people, okay, traders, trading firms, all right, were really underwater and having to de-risk really quickly. And it's just a domino effect, right? These cascading liquidations. And then obviously people see that they're not even doing a carry trade, but they get, they're getting stopped out. They're selling because obviously they see the prices crashing. So we had this, domino effect here, this cascading effect. And what that ended up doing to Bitcoin was, exactly the same thing. Bitcoin is a risk asset in many people's eyes. So people were just de-risking everything. So we had this huge move here. And, this is quite astounding to see in real time. I think like close to $1 billion of liquidation, something like that. And if we look at Ethereum, it was dramatically worse for Ethereum. And there's some reasons for this, but Ethereum actually, it had a 20% move in just, a few hours. Or a few minutes, actually. This last leg here was literally just minutes. Just people getting totally, washed out and wrecked here. Now, the reason why Ethereum had such a dramatic issue compared to things like Bitcoin and Solana, which Solana has fared the best, really, is because you had jump trading and some of these other guys that were just dumping Ethereum for days leading up to it and were dumping over the weekend. And we can see that because of the on-chain transactions. Now, what I think we should also talk about, though, is it's not just one thing that caused this, okay? To get the VIX to 65, this was not a big enough event on its own, the carry trade, to really do that. I think this was also, and this is kind of obvious, that people were shorting volatility. Why? Well, a lot of people have been making a lot of money shorting volatility for like the last year. So whenever it started to go up, a lot of people short volatility were getting blown out of their trades. So it kind of exacerbates the problem. And you also had, probably what makes this a little bit more unique than some of these other events in the past is the influence of the 0-day option. right? You have a lot of people doing these 0 DTEs, and this is kind of speculation, but I think that helped it go up so much versus, in the past. Speculation. But let's talk a little bit about kind of what happened before this, because the question is, was this really the first domino? And it doesn't really matter to know that, but I think it's interesting to talk about here because there's some implications of what the Fed did last week that may have kind of exacerbated this, kind of sped it up, who knows? But I think the Japanese carry trade issues are probably about over. That's speculation, but if I had to guess, that's probably about over. But and namely, if you look at, and the reason I say that is if you look at the Japanese stock market, it bounced and recovered all of its losses the next day, right? So what actually happened before this? And this was last week. Okay, we're going to talk a little bit about the FOMC last week. So let me go back here. And we had the FOMC on Wednesday, okay, of last week. And this was a kind of a typical FOMC meeting, but the Fed came out and they didn't lower interest rates for July, and people expected that. But what they did, I think that was a mistake, and I think they realized that was a mistake. I'm going to go into why. But after they said they weren't going to lower interest rates, they pretty much said they were going to lower them in September, but they didn't definitively say it. And they weren't being extremely dovish. They weren't being extremely hawkish, but they were being neutral enough to where I think it potentially, that stuck in people's minds. Like, oh, well, the Fed might be behind here. People were thinking that already before we got into data that actually made people realize, okay, the Fed is actually behind. So we got this US ISM manufacturing PMI that came in quite a bit lower. And then we got the non-farm payroll, which was significantly lower than the forecast. And to top that off, we had unemployment ticking up by 0.2% versus the forecast. So a lot of people started saying, oh my gosh, we might be going into recession. So on Friday, we had a huge sell-off, recession fears, and that just carried on, into the weekend with this Japanese yen blow up, right? So all those factors together is really, plus, again, a lot of leverage, too much speculation, too much leverage in the global financial system. And that's how you got this move down. Now that we have that out of the way, let's talk a little bit about just something a little bit more concrete, less speculative. All right. Where are we right now with Bitcoin? All right. So you know that this is the range high here, roughly like 70K. We couldn't break out. We had the Trump pump here. After the Trump rally at Bitcoin Nashville, we started to get a sell-off because you were going to get that either way, in my opinion. And but right after that, okay, after people started selling, sell the news, is when we started to get the issues with the recession fears and then ultimately the yen carry trade blow up, right? I see this as still just about in this range. So this is like the range low, and you're right at it right now. So right now, Bitcoin is fighting to get back into the range. No surprise that it's not just, blasting through it, because there's still potentially, some risk vectors to be aware of, or to keep, people are still a little bit on edge after that event, but it has had a fairly strong recovery since. So we're about 15% or more, about 15% off of the low, right at the bottom of the previous range. But if you look at this structure objectively, so we're just going to look at this from TA perspective. I mean, it's doing what you really want it to do. It's respecting this trend, okay? And this looks a lot like 2019, all right? So you see this chart here, okay? I'm going to show you another chart and just show you how this reminds me, or I say 2019, it reminds me a lot of the COVID crash. Obviously it's not nearly as dramatic in magnitude, but this is very similar structure here that we got in 2020. All right, so if I zoom in here, tell me that this structure here looks awfully a lot alike. Okay, so this downtrend, multiple rejections, trying to break out over this level. And look, I'm not saying it's going to play out exactly the same, but this is very, very similar in my opinion. So if we can maintain the structure, so get back above into, above this 56K level, and start to consolidate back up here, you're really just you're still in this constructive phase, I think, before you end up having a parabolic run later. The last video I said 250K. I haven't changed my mind at all. You just had a big deleveraging event. You're still, I'm not gonna say you're in the range, but you're almost back in the range, pretty much. If you count these wicks down here, then you are back in the range. I would say the real bottom of the range is really these closes here. But as you can see, this is not a very weak chart. This is still very bullish in my opinion. So I do expect for this to eventually get back into this range and chop around going into November. Now, I talked about this. I don't know if I mentioned this in the last video, but I don't expect for this just to break the high, to just, do something very quickly like this. Although this is a weekly chart here. So maybe it would be about the same timing, but we have an election in November. That's going to put a lid on breaking the highs here, in my opinion. Why? Because so much of the crypto trade is anchored to Trump winning, and it's like a 50-50 race depending on who you ask right now. So people aren't going to go ahead and just assume Trump's going to win. Doesn't mean that people won't buy in advance, but I don't think you're going to have enough buying pressure to break these highs with that overhead risk. Not to mention right now we still have the Israeli-Iran situation, which could something can happen there at any moment. So there's still quite a bit of risk vectors. And obviously seasonality in September is usually, September, October is usually a time when you do want to be cautious. That is when volatility typically increases, and which is the inverse of liquidity. So things are a little bit less, or quite a bit less liquid typically, which creates volatility. Now, what I think is special though about an election year is that the Treasury and the Fed can do things to prevent volatility. Okay, we're not going to go into all the mechanics there, but I think they will do everything possible to dampen volatility and a market crash, financial issues going into election. Of course, a lot of analysts will say that, well, the Fed, they're independent. I just don't believe that. I believe that they don't want to be the blame for the election. They don't want to be, they don't want to cause any problems on their end. So I'm not expecting really much volatility I'm not expecting near as much volatility as we saw on Sunday and Monday. But I do think it could be a little shaky. Things can be pretty choppy as we get into, Q4. But I do expect after the election to see quite a bit of buying, just regardless of who wins, really. I think obviously if Trump wins, that would likely kickstart this up, much quicker to the upside. But I'm not convinced that the Kamala administration is really anti-crypto necessarily. We know that the Biden one was, but there does seem to be, and maybe I'm going out on a limb here, but it does seem that they are kind of waking up to the fact that there is a crypto lobby, and there is a very large amount of crypto people who vote, right? And I know that the crypto, the crypto donors, the people who are donating to these political parties, they donate to both. They're trying to get pro-Democrats into the Senate and the House. They're also trying to get Republicans, whoever's pro-crypto. So I think that they will come around. We'll see. That's a little bit of, obviously, it's speculation. But just notice how these look very similar. I do believe that this is going to play out in a similar way. Now, let's jump back to the charts here and talk about, some trading opportunities for this week. All right, so here's my weekly plan here in terms of like a trading opportunity. We talk a lot about this in the Discord. But I figured, heck, we'll just kind of talk about one scenario here. So I don't expect that you're just going to blast through, the 60K level, which is right around here. Let me show you the volume profile so you can actually see where the big trades have taken place. So this is where things start to get, I would say, slower in the sense that you've had a lot of trading that it really starts up here. This is where the most of the trading has occurred. So if you get back to this level, I don't expect that you're just going to blast through that. So if we get anywhere close to the 60K level, I do expect that people who bought down here will begin to take profit. And I am expecting that this would probably be a good short. Now, obviously, not financial advice. We're not advocating people do that. I just think that will be a level that you will start to see sellers. And you might have a decent short back down to this level here if you were to get here in the first place. So that's one trade I'm looking at. And then if we were to break above this level and then retest it, that's probably a good long to try up to that level. So there's two good trades there. In terms of a longer term trade going into, next year, I think anywhere from 55 to this 50 level is a good place to add, in my opinion. Not financial advice, obviously, but that's a good place to add, in my opinion, if you are bullish on the future of Bitcoin, crypto, and still believe that we have a lot of gas left in the tank going into the end of the year and into 2025. Let's talk about some of the big winners here, some of the outstanding performers since the bounce. You have to start with Solana. I mean, it just is in a completely different space at this point. I remember watching this thinking it might pull an ETH when it broke below all of these weekly closes, but it went down. I'm going to show you this kind of closer here. I mean, once it broke the lows, it had a really strong move down, but it recovered very quickly, and it is back into its range. So this is by far the strongest chart out of Bitcoin, ETH, and Solana. And we can see that if we go to the daily and look at some of our some of these moving averages that we love to use, it's above its 200-day moving average, whereas Bitcoin's quite a bit below its 200 moving average here. ETH is way below its 200 moving average. So it's sort of in a league of its own right now. And I think that's very interesting. And I'm not really sure why that's happening, but clearly some very large buyers are interested in Solana here. So we're going to be keeping an eye on that. I would love to see a pullback here. I think that would probably be a good place to bid. That's what we'll be looking at. In terms of some of the altcoins, I just don't know if I'm that interested in. I definitely don't want to put on a big swing trade on altcoins here, because let me just explain something here very, very briefly. So we had this big VIX spike. This is a shock to the system, and I'm not convinced that this is the end of the potential downside, because although the markets have recovered, we can see that the S&P 500, for example, has recovered quite a bit from the low. Are there going to be any second order effects, right? What are second order effects? Well, if you have a hammer and you hit your hand, it's going to hurt. But a few minutes later, you're going to feel it throbbing. That's a second order effect. Is there something that may have broken that we don't know of yet, right? There can be lags between the impulse and the response of the market and all of its components. This is a very dynamic system. So in my opinion, it's probably smart for the next few weeks to keep a close eye on things and be open-minded about further downside, but not be, obviously you don't want to be over bearish. Things look good right now. we have data next week, and I should have mentioned this. One of the reasons why I think that it'll also be a good short Bitcoin that is off that 60K level is one of the reasons why I think it's able to drift higher is because you have almost negative funding. It's been negative. It's kind of right there. This is aggregated funding here. It's sort of at like neutral right now. What that's telling me is there's still a ton of shorts open, right? And naturally, if there's really no risk vectors in the near future, as in the next few days, there's no economic data to be looking at this week. Okay, I'll show you what I mean. There's really nothing to pay attention to this week. As you can see for the next few days, the markets are probably going to drift higher, maybe until you get to this Thursday U.S. unemployment claims. And next week, we have some important data. You have PPI on Tuesday and you have CPI on Wednesday. So I think markets will probably be careful going into those two things. So again, right now, it's not about the Japanese yen carry trade that's what's worrying people. It's more about the recession fears. So these data points will be very important. I suspect that people will hedge going into them. But until we get to them, you'll likely see some short covering and people, maybe FOMOing in as things go up, which sort of throws gas on the fire, so to speak. All right, guys. So I think that's all we're going to cover in today's video. And until next time, happy hunting, friends.
Hey, thanks for watching. Be sure to like and subscribe to our channel if you'd like more updates like this. And let us know in the comments, what do you think about today's video and DeFiancy update and insight? Also, make sure that you join our Discord, our free community chat, where we discuss things like this, what's going on in real time. Typically, our Discord community is the first to know what's happening, and we would love to see you there. Check the link in the description. And until then, we'll see you in the next DeFiancy Insight video. Bye for now.